Okay, hi traders, here's a new video. First of all, a risk warning, your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another binary options trading, binary option strategy video where I'm going to show you those kind of trades which I have already done based on the concepts which I have explained in the ebook. Get this ebook, you'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook, you'll find the link in the description, and in the description you will find also the link to the Facebook group. So, okay. Yes, first of all, I want to show you those kind of concepts for those one who don't have seen this yet. Yes, because I think there will be always new traders who see my videos. So I have to show you them which are the most important concepts and what are the most important parts of the ebook. So first of all, you have to understand all those kind of candlestick pattern and chart pattern. I will not go closer to them. The most important are for me, in my opinion, the evening star, morning star, engulfing candle, pin bar. Yes, hammer. Yes, shooting star. Yes, okay, that is already. That are the most important in my opinion, and the engulfing candle, obviously. And then the chart patterns, the double top, yes, and the trend channel, and yes, and some of the triangles, in particularly, I would say the symmetrical triangle and the ascending and descending triangle. 1 second. So yes, and that were those ones which are most important ones. Then after this, I would recommend to all to understand those concepts about the candlestick math, the rejection stuff, the market condition stuff. Yes, here you see trend, how to identify a good strong trend from a healthy trend. Yes, because depending on the trend and depending on the market condition, candlesticks behaves different. Chart patterns behaves different. A double top or a double bottom in a consolidation area doesn't mean anything. Yes, don't trade those kind of double tops. Also, if it's a small one, don't trade it in a consolidation area because you get almost trapped from this consolidation area. Yes, the same is valid. A hammer in a consolidation area is mostly not a trend continuation pattern. It will be a reversal pattern because price is trapped. Consolidation means price is trapped in between those kind of areas, yes, support and resistance areas, and that means mostly that you don't know where it goes because not even the market knows where it goes and how you should know this. Yes, stay away from those kind of areas if you are not experienced and you know that candlestick pattern will not happen like this. You can trade at the edges of the support and resistance areas here or here, yes, in the opposite direction, but you can always hit by any kind of breakout of it. So then if you are using EMAs and the Bollinger Bands, yes, you have to know what those kind of indicators are meaning, what is the EMAs are telling you, that is almost that what I have discussed here in this video. And that is, in my opinion, one of the most important if you are using the Bollinger Band and the EMAs. This one here, where I talk about what all those kind of Bollinger Band, yes, I would say, yes, how it's explained, yes, what those kind of Bollinger Squeeze, breakout, and so on are telling you, yes, about the price. And the same is valid here for the EMAs. Yes, where I try to show you what this means. And here we have a consolidation area, a constriction, where price is trapped in between. Yes, and you see here you should trade only at the edges of the EMA in the opposite direction. Here you would do a call, here you would do a put. Yes, that is how it looks like. So, okay, after this, the standard concepts where I talked about the support and resistance level, how to draw support and resistance based on candlestick pattern. You see here the exemplar of a shooting star, which can be everything: gravestone doji, dragonfly doji, and so on. Yes, all those kind of candlestick patterns which have long wicks. Yes, then obviously this kind of concept where I have explained how you should enter into a trade. That one here, yes, what you should do before this, and then those one to get your trades in the money, yes, are those concepts like this one here, how to predict the running candle, which are included in the 7th edition of the ebook, yes. This one here where you choose the entry point, yes, and those one what I would call here something like sure shots, yes, yes, that are something like sure shots here, because they are telling you a lot about the next candle, yes, and this is telling you also what is the next candle most accurately, yes, because you see those kind of candlestick patterns are telling you in general that we are getting in a reversal, and if the reversal doesn't happen on the first candle after this kind of candlestick pattern, then you can go with a high probability in a trend continuation. After this, then obviously you should see selling pressure on the bearish ones, and you should see bullish pressure, yeah, on the lower ones here, on the bullish ones, and that is already near a sure shot. Yes, then you should understand what the ratio between real body and wick is meaning. Here, this kind of bearish candlestick, real body shadow pressure reading. Yes, and those kind of things where I talk about the bullish candlestick patterns, yes, those kinds of things which I gave to you for free are there are other ones who are selling only this kind of stuff to you. So okay, that was already. That are the most important concepts. Obviously, you should understand all the candlestick patterns. Yes, you cannot trade them blindly. Yes, also if the candlestick psychology is nice, it is not a good way to predict the next candle, because the candlesticks are giving you only a few part of those window which you should see. Yes, and I have explained this often. Yes, that only based on candlestick pattern, it's the same like you would only predict the next candle based on a signal provider. Yes, this will fail. Yes, because the context is the most important part. You should understand in what kind of relation price is to the market, and that is one of the most difficult part to understand. And obviously this kind of part here about the fake breakout, and the part about, you see how many pages it are already 113 pages. Yes, full of price action concepts, yes, which you should try to understand, which will make you a better trader, yes, and you don't need to know them all, yes, but those ones which I have named now are the most important ones, yes, and you should try to apply them to your trading and to practice them as much as possible. So, okay, now we are going to start with the video, and I have prepared this one. I entered already into a trade here, yes, and I got here into a trend continuation. Let me see something. Okay, I have seen that I have already skipped one trade. Yes, I entered here into a put. Yes, because this kind of dark cloud cover, yes, showed me. Let me show you this. First of all, I have to understand to explain you what we have here. So you see the EMAs. Yes, we have here flat 100 EMA. We have a almost flat 50 EMA, and we have the 20 which is crossing the 50 EMA here. So we have here overall a ranging market. Yes, because of the flat EMAs, price is ranging around the 50 and the 100 EMA. Yes, and we got here a Bollinger Squeeze, and after the Bollinger Squeeze you can expect or a breakout or a consolidation area. This consolidation area was here short because we have here ranging market, and so what do? You trade here the edges of the Bollinger Band. Yes, I didn't enter here because I was doing the explanation of the ebook, the intro of the ebook, but after I saw this kind of tweezers top, yes, here you see after an uptrend, yes, here we have also a double bottom. We got here the tweezers top, yes, and in confluence with this tweezers top, we got here also dark cloud cover, and that was the reason to enter into a put here above the closing price of the previous candle, because I was expecting here a trend continuation. Important here is, again, you see the entry point above the closing price of the previous candle, yes, and I have done this put only because I saw this flat 50 EMA and this flat 100 EMA, and maybe also the 200 EMA would be somewhere here below and would be flat too, yes, and only because of this I have done this put, because else I would have avoided a put in this kind of condition, because else it would have been most probably going up, yes, because that is what I have explained about the the entry point, because at the end it could be also after dark cloud cover, I have explained this, that price, the next candle would be a bullish one here, yes, and after this it would go down, yes, that is what I want to show you, but because we have here flat market, the rejection will be not so strong, yes, but important here to enter above the previous candle closing price, and if you are not able to do this, stay out of the trade, yes, that is what is my consideration to you, yes, recommendation to you. So okay, so you see the price is retracing back, and only because I entered a little bit above the closing price of the previous candle, yes, this one got in the money, then I entered again into a put, because for me it was clear that price will go down further, because we are here in a ranging market. This candle didn't finish bullish, yes, and because of this, and this kind of wick showed me selling pressure, yes, and because we have here now the pullback from this double bottom, yes, I have explained this in the ebook, that the price tries almost often after the breakout to get back to the neckline of this kind of area. You see, we have your ranging market, yes, and tries almost often to get back, and that is what you can do. You can trade the upcoming trend from this double bottom or double top, and then if you see a pullback initial, yes, starting, you can trade the upcoming downtrend from this double bottom, yes, and that was the reason why I entered into a put here. So I tried to do a put here, yes, but I understood really fast, yes, you see how I understood really fast that price will go up further from this level, yes, because that is what I have explained before, that you cannot trade any kind of candlestick pattern blindly. This kind of this kind of hammer, yes, inverted bearish hammer, would be in the most cases a trend continuation. But because we have here ranging market and the EMAs are flat, it was a reversal pattern. And that is what you should understand. And that is what I've tried to explain you with this kind of videos which I'm showing you. Yes, because the most of the traders would have done after this kind of candle put, only because they would understand this as trend continuation. Yes, but the problem here is that this kind of candle was already, yes, this kind of candle here showed already, yes, that this will be not a trend continuation, because this candle didn't broke the lower shadow, the support level, yes, which I have explained also in the ebook, the support level, yes, and that was the reason why I understood that this inverted bearish hammer was not a trend continuation, a reversal. You have to be careful about, or you have to be care about the small things, those things which are not visible, so or they are visible but which are not so how I can say, they are not giving you the it doesn't so obviously, yes, they are not obvious, and they are indirect. And so you have to understand those things indirectly, because this candle, this hammer, didn't broke this support level of this dragonfly doji. That was this what I have shown you about the how to show the, or how to understand the support and resistance levels based on the candlestick pattern. It is one of the latest deep explanation video. Watch this, because this dragonfly doji makes part of the hammer. Yes, the inverted hammer, and you know the upper, the lower, no, the normal hammer, the hanging man. The shadow, the lower shadow makes part of a support level, and that is what I was expecting here. If this candle would have been broken, the support level of the previous candle, I would not have done a call. I would have done a put. Yes, because then I would have expected that price would continue to go down. So, and that was then a news event here. Here happens a news event. This week here talks like many books. Yes, let me show you this. This week here of this huge bullish candle was showing so, yes, was giving such kind of hint that there will be selling pressure. And if you would apply here some kind of Fibonacci level, you would see that this level here, this area here around, is the 261.8 Fibonacci level. And because this candle, yes, didn't touch the 50% level of this real body here, you could do also after this one here, after you got a higher entry point than the closing price, and put again, yes, because you can expect that price would continue to going down at least to the 50% level of this bullish big candle. So, okay, that was already. If you like this video, do a like. If you didn't subscribe, subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye-bye.